Hey everybody, good morning. Welcome to Stock Trading Pro. How's it going today? Got a lot to talk about. Is the market pausing to rally again? Is the stock market pausing to go down? I'm going to give you a quick snapshot of the futures this weekend. You make your call right here. That's pretty much it right now. We've actually been kind of in a heartbeat pattern back and forth where we're kind of hovering now near the low of that trading range. A lot of good data come out yesterday. We had some more data come out today. Visa and Apple we're going to talk about this morning. We're also going to talk about Hood stock and what's going on with that business model right now. We're going to work our way into a couple of things with Kathy Wood this morning as well. One stock she's buying, one stock she's dumping and got completely out of it. I think she has like 100 shares of it left. Then we're also going to break down, we're going to go into Bitcoin. And actually, John mentioned something before. We're actually going to talk about a stock that had a $3 rally at the end of the day yesterday that has kind of got my attention now. It is down $125 since November, but it's on every website that I see. So stick around. We're going to be back in just 1 second because that stock's pretty interesting to take a look at right now. Okay, so thank you so much for joining me here today. As with every video we do, everything we talk about here is for educational purposes. It's up to you to make that final decision. It's up to me to help you make better decisions. If you could please do me a favor, if you get value out of these videos, wait till the end. Definitely smash that like button and hit the subscribe button. We have new educational videos coming out this weekend, so I think you're definitely going to want to make sure you get those updates. So we're going to start out with Apple. Apple is the big story of the day. We're actually going to work our way over into that chart and get over there. So last night it was actually up a little bit more. You can see how much it's up over here, 488. It was up $4 higher than that, but the news was just absolutely amazing. Almost $124 billion reported revenue. I believe that the final number was $30 billion as far as net on the quarter. The stock was up as much as 11% yesterday. It's not there right now, but still pretty impressive. But the bigger thing I want to talk about is you've probably seen us work the charts every day. One of the biggest things that we do that before we choose to buy a stock, we work the charts in the sense that we're looking for obvious order flow, and then we're looking for spots in the middle. We're not looking to get the top. We're not looking to get the bottom. We're looking to get the middle. So what's kind of interesting here is Apple has not really been what we would call holding the bid. It's actually been pulling back with the rest of the market, and we'll just give you a little bit better view of that right now. You can see you might call this a classic head and shoulders top. Let me actually work that for you right there. So a head and shoulders, you have a shoulder, a head, and another shoulder. And technically when it breaks that neckline, let me actually make that a little bigger for you so you can take a shot of it. Shoulder, a head, and a shoulder. And that's the breakdown right now. But what's interesting is 164 and change. We're still not out of the previous 2 days trading range. We actually were all the way up here last night, but now we're back basically into pretty close to inside the last 2 days. So what does that mean for Apple? If you remember yesterday, we've been talking a lot about some of these stocks that have had news, had these giant explosions, and how we plan to trade them after that. Well, today, mostly as a short-term trade for Apple, we're going to be looking at, again, that one price that matters the most to us, and that's today's opening price. As long as it's above that opening price, I'm going to be looking to aggressively be buying that stock as a day trade. I want to be clear about that because if we work our way over to the hourly chart, which is what I want to work right now with you, is the most recent price action. And that's really the biggest thing that we have to be focusing on right now is the most recent price action. Now, when you draw these lines, you do not want to go through any other price. You want to make sure that you are adhering to highs and lows and not going through. So what's technically happening right now is prices all the way up here at 164 and change, which literally takes us to that spot. Now, the news is amazing. However, we're still stuck in this box, even with the earnings. We were all the way up here at 168 and change, pulled all the way back now to 164.10. And you can see that we're kind of like right there. So again, if you've been watching in the videos with us all week, and especially on Monday, we scripted out exactly what we planned to have happen in the market this week. And we've got some amazing comments about that, which is really what I want to inspire you to do, is start to have the guts to trust yourself when you do your analysis. And first is the chart reading part of it, but then the second part is becoming a trader. We've been getting a lot of nice feedback about that as well. chart reading is the order flow and the tape reading. That's setting up the ideas. Then the second part is actually making the trading decisions. That second part is where you make money. You should not have the aspiration to be the world's greatest chart reader. Unless you're writing a book, you should have the aspiration to be the best trader you can be. So the second part of what we're talking about right now, and whether or not we're buying Apple stock, you can see that all the way going back since the 12th of January, the stock's been in a downtrend. And even, let me actually make that a little bit bigger for you. Even with the rally after earnings, it still needs to get above this level, because unless it doesn't, it's still going to be stuck in that box. So really what I'm looking for right now is a trade between 164 and 170, which is basically maybe up here in this 168 level, 169. So let's talk about what we just did. Even with Apple's earnings today, even with the blowout revenue, the record net profits on it, it's still stuck in the box from the last 5 weeks. It rallied above that. Remember what we talk about all the time. If real buyers are following up, they're going to hold the bid. But right now they're holding the bid, which represents this box, this where's the right price, as we talk about a lot. If it holds above 164.25 today, then I'm looking for an intraday rally up to the 169 level. So it's basically a $5 trade that I'm looking for in Apple today as a day trade. If it holds that bid, and we are now breaking the longer term downtrend, which is probably over the last, let's say, 3 weeks or so, which is this move to the downside, that will then make the daily chart well bid. So if you remember what we talk about and a lot of the stuff that we're talking about this week, that's how we want to see Apple finish today. Get right up to that 169 level. We want to see it go well bid, which means higher highs, higher lows. Then I will start considering a little bit longer term position. So again, we're getting a lot of really nice feedback on the kind of stuff that I'm walking you through to understand how to do, which is basically we are scripting out what we need to see in order for us to take action. So again, I hope everybody's writing this down. If this happens, then I plan to do this. That's what I'm mapped out in Apple for this week. I want to walk on over into a different stock that did not have terrific news yesterday, and that's Robinhood. Robinhood just got absolutely crushed yesterday, and I actually want to give you a little bit of an insight into what I wrote this morning in reference to Robinhood. So this is our Discord channel. This is where I put all of our stuff during the day. But I want to walk you through something from a business perspective of Robinhood. If you could, like, off the top of your head, who is trading actively on Robinhood? They got incredibly massive signups during the pandemic. And for the most part, it's people looking to trade fractional shares, maybe trade while they're at work. Well, that was during a raging bull market. And right now we're not in a raging bull market. They keep talking about coming out with their crypto wallet and hoping that's going to be the be all and end all to the stock turning around. Got crushed yesterday. And really it comes down to what I wrote over here. Okay. And again, this is not a knock on anybody. This is just the reality of the business model, which is this. Okay. Robinhood stock got destroyed after reporting and is currently down over 15%. With volatility high and the market going low, it looks like they chose the wrong target market. Underfunded kids with no capital don't trade when stocks are strongly bearish. They need a new business model. Now, is that necessarily knocking Hood? No. Look, all entrepreneurs make decisions that get them to a different level of where your business is. You put stuff out there and you iterate. So what we need to pay attention now, this is really about paying attention to Robinhood as a business, because that's ultimately what we're looking at. Now, the stock's less than, I believe it's less than $10 right now. Let's just confirm that. And we'll pull the stock up. Last I looked, it was 9 and change. Yeah, it's right at the $10 level. So what does that mean for us for watching Robinhood stock now? If we're reading the headlines, which is something that we really don't talk a lot about here because we're normally talking about tape reading, order flow, reversing risk, that kind of stuff. What we're looking for now is a business model that works for Robinhood, regardless of whether the market's going up or down. They're getting clobbered right now because who they're marketing to is not necessarily going to be that active as things are going down. And even Bitcoin's going down as well right now. So it's going to be interesting to see, do they work through a different business model where it doesn't matter if the market's going up or down, they're still going to have a pretty active membership base or subscriber base. which kind of takes us over to Bitcoin. Now, will they rally? And again, this is something to pay attention to. If Robinhood comes out with their crypto wallet and Bitcoin finally bottoms and starts to rally, that could be worth a short-term pop in the stock. So let's actually work our way over into crypto right now. And we're actually going to go out to the continuous contract because we've been working this chart. We've been talking about 30,000 as the next support. Just to be clear, it's still pushing down and pausing, pushing down and pausing, pushing down and pausing, pushing down and pausing, pushing down and pausing. So we're going to get this out of here because we are no longer looking for that. We are now actually extending out. This downtrend is still intact. So if we're looking at Bitcoin right now, we're tying that back into the possibility of Robinhood heading back in the other direction. We need to get back above 38,000, which is not that far. That will end up taking it into another box like we had over here. But if that happens and Robinhood comes out with their new crypto wallet and it becomes, what they hope it to be, actually from what I read, it's expected to be in Q1 of this year, we could see a really nice pop. Now, again, I'm not bottom fishing. What we're doing is if this happens, then we plan to do this. If we see positive headlines out of Robinhood adjusting their business model and Bitcoin starts to rally and they come out with their wallet, it could be worth a nice pop. I mean, it wouldn't be shocking if the stock goes from $10 to $30, quite honestly. So that's what I'm looking for. I'm not looking to bottom fish. I just want to be clear. But saying that, I'm going to work our way over into a different stock that actually John A. had mentioned before. We're going to work our way into AFRM. Now, what we talk a lot about is accumulation, distribution, and markup and markdown. Now, clearly, this stock is getting crushed, right? Not even a question. But what's interesting here is going into yesterday's price action, we actually saw the stock rally pretty hard, $3 at the end of the day with significant volume. It's also up another $1.50 this morning. So if we go back out to the daily chart and we take a look at it, it's also resting right at long-term support. Again, long-term support, the stock just came out last year. But this is the level that the stock has been holding and actually where it took off from. Now we add a little bit more to the equation. Remember, okay, that's the first thing I'm looking at on the tape. That's the second thing I'm looking at on the tape. Now we're going to take a look at the volume. So we're starting to see relative strength in the stock and volume increasing at that obvious support level. So if you remember what we talked about yesterday, and quite a few of the stocks we were mentioning and going over yesterday, was we're looking for how long has that buying pressure from the smart money been allocating shares, right? How long have they been getting in and allocating money to pick up some more shares? As of right now, it's not reversing. So what we're walking through right now is the difference between bottom fishing and noticing something changed in the tape. So it's kind of like there's a disturbance in the bearish force right now. So as it's going down, something is changing. So this would go, instead of it going into our trading game plan, which means we'd be looking to trade it today, this is going into our tracking journal. So our tracking journal are ideas that we want to then go back to every single day to say, not yet, not yet. Oh, wait a minute, something changed. So what are we looking for now? As we mentioned yesterday, we want to see at a minimum, it goes well bid, which means higher highs, higher lows, and good volume and close near the highs. If yesterday afternoon's volume, which actually the volume has been pretty decent over the last week, starts to see the stock turn around, then we're going to pay attention to the same thing on the weekly chart. So I'm going to pull up what that looks like right now. Okay. So again, what we're looking for is this kind of price action over here. It's still pushing down, still not even close to turning around to the upside. And that's where we are right now. So again, a minimum, we need to start looking at this, maybe get above 66, and then it'll go into a box and potentially turn to the upside. But what we want to see is a candle like this week on the daily chart. We want to see yesterday afternoon's buying and today's buying show us well bid, and we want to close near the high. Then the same exact thing we want to see for next week. We want to see well bid on the weekly chart. We want to see well bid here, which will then also break this bearish order flow. And again, what does well bid mean? Why is well bid so powerful, for lack of a better way of putting it? Think about it. Again, let's use John Bates as an example. Let's say John Bates has a hedge fund and he's looking to allocate money. His research analysts like, all right, let's start building a position. We love the cash flow down here at this price. Let's start to build positions. So his hedge fund will start allocating shares. They'll start paying higher prices, but the stock is still going down. So as it's going down, they're also going to hold the bid. Just think about it. It's just common sense. Trading, and then it doesn't have to be that complicated, but you do need to have something that you believe works. So if you could pay attention to that, somebody over 1 day, 2 days, somebody with a lot of money is now paying higher prices. Sellers came back in. They held higher prices as well. That's the significance of well bid, higher highs, higher lows over time. The longer that's happening, the more money that's being allocated. That's why it's just foolish to be buying stocks on the way down, because at that moment, there's more selling. They're paying down. They're actually hitting the bid in trading terms. So again, we're not bottom fishing AFRM. We're looking for signs that accumulation is happening here. And then if that price action that we just mapped out unfolds in a way that makes sense to us, and it's happening from 2 days, 3 days, 5 days, 10 days, now we got to sit up in our seat and say, okay, somebody with real money is starting to lean into the stock. And I personally will then start to build a position with them. So remember, I want to give you a visual of this right now. We're actually going to go to the daily chart. So if we take a look at the daily chart and we're looking at this big move to the downside, and if what we're expecting is a move back up to the upside, what are we actually doing? If this is the first sign of a reversal, the first sign of the bearish order flow turning into bullish order flow, that first sign for smart traders means it's your first position size. So you don't jump in there with everything you got. You go in there because it's the first sign of a reversal, the first sign of your initial position. So again, what does that mean? Let's say you want 1,000 shares, just to keep the math simple. If it's the first piece, maybe I'll go in with 300 shares to give the stock a little bit of time to work out of that bearish order flow and work back into the other direction. So then when would I add to that position? Well, again, we're scripting this out. We're knowing what we want to do and need to do well before it happens. We need to see a rally, a pause, and then we need to see them holding the bid. If they hold the bid again, if John's hedge fund comes in and starts holding that bid again, if we start to see selling, but it doesn't go down, or it goes sideways and doesn't go down, or it goes sideways on light volume, which is classic volume, right? Then we could look to be confident that we can add to that position. That's the smart way of trading. That's why every single trading book from 80, 90 years ago to today, if you're building positions over time for a little bit longer term swing trading, that's the smarter way to do it. Day trading is a little different. We can get in a little bit more aggressive on the day trading side of things because there's a little bit tighter window for where you're managing it. So that'll be a little bit more aggressive on the Apple trade if it stays above those levels. So those are three ideas actually take a look at. And Apple's a day trading scenario. Hood is a longer term tracking journal, business model, headline type of stuff. AFRM now, volume is coming in. It's starting to bounce a little bit, but hasn't turned around. Now we know over the next couple of weeks what we're looking to see and how we'd want to start to allocate ideas to that. So now we're going to work our way over into Kathy Wood. Oh, Visa, actually. Visa's another one today. Visa actually reported last night. You can see it's up 3.5%, up $7. Really good numbers. Now, where does this take us in Visa? So we can put this on in the context of the trade. So right now it's at 213 and change. So it's basically right in that area right there, maybe just a little bit bigger. So is there a obvious bias to this right now? Well, if we, again, go out to the most recent price action, you can actually see where we are right now. We are kind of in the middle of from here to here. So there's really not that much of a bias, but this finally broke. So if we were just looking at yesterday's price, let me actually zoom that out a little bit more for you. If we were actually looking right here, from here to here, if you were in the community with me, we'd be saying it's in the middle of nowhere. But earnings came out now and punched it in the upper third. So now we got two trades here. This is a two-step idea. So I'm going to actually map this out for you. Again, I want to walk you through exactly how I'm planning to look at this trade today. So what I'm looking for today is the first trade I'm looking for it to remain above this 213 and change. So this is what I would call a two-step trade. I'm looking for the first piece to remain above 213.50. As long as it does and finally gets above that 219.50, then I'd look to add, because then we've broken the bearish order flow over here, and then we look for a little bit of a bigger move to the upside. So what are we talking about here as well? Well, this is an earnings catalyst, not a order flow catalyst. So if you remember, a lot of the ideas we've been talking about this week, IBM being one of them, that the earnings pushed it up. Now we need to see, do buyers hold the bid? That's what we're looking for now in Visa. If the opening stays higher and buyers step in and keep it there, then I'll trade with conviction. And I just mapped out the two-step entry. So I'm not, again, not going with full share size. The market's still a little bit squirrely to the downside. So I'm not getting aggressive. I need to see the order flow push up, hold, and only then will I start to allocate more shares. So again, just want to give you a little bit of trading insight into the current market conditions, because this is actually critical. All right. So we talked about this morning where we looked at the ES and mapped this out, right? We looked at this on the hourly chart, and that's the price action that we have this week. Now, here's the challenge that I want to ask you. Visa is actually a longer term swing trade for me in those two scenarios, above 213.55 and then above 219.55. So it's a two-step trade. If you take a look at this chart of the ES futures right now, and you can see what's going on during the week, okay? In the community this week, in our boot camp, we have spent a massive amount of time about preserving capital, about being smart with when you're deciding to trade, about the cost of over trading in the long term and how that affects not only your mental bank account, but your actual trading account by over trading when your edge is much lower. We've mostly been taking quicker profits, a little bit more on the day trading side. I've reduced my swing trading for good reason. The market's getting pounded for the last 4 weeks. But then when you take into consideration the price action for this week and you throw the FOMC on top of that, it's a recipe for disaster if you're not paying attention to that's what's going on in the market. There are certain periods of time where you can, and quite honestly should, be trading a little bit more aggressively. Right now is not that moment. You know, we get a lot of new members into the boot camp, and I'm super grateful for that. Very excited about, I can't wait to learn. I can't wait to trade. Order flow is amazing. And you're all pumped up. And then this week, we're kind of like, all right, we're not going crazy this week. There's pockets of opportunity. And that's kind of a lesson that a lot of new members need to learn. And as soon as you learn it, you actually immediately get closer to net profitability. Because here's the thing. If we take a quick look at this again, right here, right? And we're trading actively this week, and we see that's what's going on. So if we're here on Monday and we see the market's a choppy mess, there's the FOMC announcement, there's earnings that are bad, some earnings that are okay, and kind of all over the place. If you start here on Monday and the market's very tough, you end up chopping yourself up and over trading, and now you're down here. But then the market, let's say today, finds a bid or becomes obvious. Instead of chopping yourself up and you've been reducing your position size, you've been booking profits quicker. Like we saw a couple of people in our Discord community last night trading Apple after earnings, actually getting out into the first bit of momentum, which is the right trade in that particular scenario. If you're not over trading, again, I want to bring this up because it's critical for you to recognize. If you are smart, and again, we all day, every day, that's all we're talking about in the community, you're not digging a hole. And I don't say this lightly, but when it's obvious, it's not hard. It's not hard to make money when it's obvious. But what you do not want to do is see this ugly price action, trade. You're buying the high, selling the low, buying the high, selling the low, getting your head beat in. Then the market, let's say whether it's today or next Monday and Tuesday to end the month, becomes really obvious and you make this much. But because you dug a hole down here, you're getting back to break even. Instead of starting maybe slightly negative because you were smart and didn't overtrade, didn't trade too much size, book profits when it was available, you maybe lost a little, maybe made a little, but instead of digging back to zero, you're now here. And at the end of January, you actually made money this month because you paid attention to the market conditions. That's smart trading. Anybody who tells you that every day is a day to be aggressive has never actually traded for a living. Certain deals are awesome. Certain conditions are like you're driving in rush hour traffic and you just look at it and you got a massive headache. That is smart trading. Make job number one, understanding what great ideas look like and then adjusting your strategy. You're not changing your strategy. You're adjusting your position size and your profit targets based on the current market conditions. So in these conditions, I've been a lot more short-term, a lot more booking into momentum, a lot more. I got a $500 profit on a day trade. I'm getting out. I'm going to get a coffee and then coming back looking for the next one. That's the current market conditions. When the road opens up a little bit, and hopefully it's well bid on the daily chart because it's just easier to buy, then we'll hang on a little bit longer. But these are the conditions we're in now. So I'm talking to you. Okay. I don't know who's on here right now. I'm talking to you. If you found this last week was very expensive for you, it's the market and your P&L just telling you that you need to understand better how different conditions should reflect how you trade at that moment. And again, I use driving a car all the time because I just think it's the easiest way to describe it. Some days there's open road traffic and you can't do anything wrong. Your favorite song's on the radio, the wind's blowing through your hair, and everything's awesome. And then there's other times you're in stop and go traffic. You cannot afford to drive like it's open road if you're in stop and go traffic. And that's where we're in right now. I can't describe it any other way. So what am I trying to get across to you? What I'm trying to get across to you right now is if you had a tough week, if this week has been very tough and expensive, and we've had a couple of people that just started, I got my head beat in, that kind of thing, who just started, just learning, right? If you got your head beat in and found this week, even this month, to be expensive, you really need to spend some downtime, the weekend, whatever, whenever you got some spare time, and say, how do I know that order flow is obvious and it's time for me to step up, versus how do I know when there's a lot of indecision and uncertainty, and that means that I should either be in cash, or if I find some good opportunities, it's a better situation to be locking profits in as opposed to looking to build positions. That's job number one. That's priority number one. Understanding what awesome looks like, and then identifying everything away from awesome and how both of those situations translate into how you should be trading. Okay. This is not technical analysis stuff. This is mental stuff. This is how you elevate yourself from, I know everything about trading, but I can't make a dime. This is the mental part of trading that will ultimately lead to you really saying, okay, what I'm doing is really not working, and I have to really start to make some different actions. And it's this decision when the pain of being pissed off outweighs your desire to be active, that's when you start to take better action on your trades and you stop over trading. You get serious about what great conditions look like, and then you start to be more patient. Remember, the cost of not being patient is not getting paid. That's something you want to write down. The cost of not being patient is not getting paid and being frustrated. But the other side of that is there's two times to be patient. Being patient when there's not much to do and booking profits quicker or getting out. And the second part is being patient when you got a great trade on the line and you're holding on to it. So think about what we just said. The secret to success has nothing to do with everything on the charts. It has to do with being patient at the right time, waiting for great opportunities and holding good opportunities. That's what great trading is. And I'm right, because raise your hand right now if you overtraded this week because you didn't pay attention, and raise your hand this week if there's been some trades that you've had that were just amazing and you booked $1,000 and then you watch the thing keep going. You weren't patient enough with the winner. It's that part of the trading that's up here that has nothing to do with the chart. So you need to do a little bit of mental work. And again, that's the secret. The secret is that little bit extra part that's not in the chart reading book. That's not technical analysis. It's the separation between chart reading and trading. All right. So I want to go to the next part. Kathy Wood had a couple of things that happened this week. Yesterday we talked about Bill Ackman and building his position in Netflix. Looks like Kathy Wood dumped the final part of her position. I think that I read yesterday that she actually has 100 shares left or something like that. But on the other side, her bullish enthusiasm for Tesla is still there, as she bought $28 million worth of Tesla as the stock is pushing down. So Tesla is actually pulling back pretty hard the last week or so. Let me actually go over here to the daily chart. The $900 level seems to be the level. This was the breakout. This was the support. That was the support again. And you can see it's all the way down at 820 now, which is putting it all the way right here at the last breakout as well, kind of like right in that level over there. All right. So what I want to do now, we're actually about to wrap this up. please do me a favor. If first of all, you know how much I appreciate being here. We're going to go over a couple of other ideas that I'm looking to buy and short sale today. If you find these videos helpful, if you find these stock trading live streams helpful, please do me a favor. It would mean a lot to me. Plus, it'll let me know that you like this kind of stuff. Smash the thumbs up and hit the subscribe button, because we do have new videos coming out this weekend. And I really appreciate it. So we're actually going to go over to the charts now, and I'm going to show you into my game plan for this morning some of the ideas that I'm considering to be buying and short selling today, depending on how the market unfolds today. Okay. So we're actually going to take a look at, on the long side, some ideas that I'm looking to be a buyer of today. I've already mentioned Apple today and the price levels that I'm looking for it to hold. IBM, I'm actually looking for today because earnings over here exploded. It's down a little bit again today. So what I'm actually looking for in IBM, believe it or not, you can see it's down here 131 and change. I'm actually looking for IBM to open lower and push back and then start a new trade. So think about what I just said there. I just mapped it out. I am actually wanting IBM a couple of days now after earnings to trade lower, find buyers. Remember what we said at the beginning of today's call, when the smart money is like, okay, I'm going to now step up and hold it. So I'm looking for the lower opening to see buyers come in. And then if it does certain things intraday, which mostly means getting back into yesterday's price action, then I'm going to start to look at IBM today as well. Obviously, we're going to take a look at some of the energy stocks, which have been strong. CVX, which is actually getting pounded this morning, but that's okay. I'm not in it right now. I just want to be clear. The energy stocks have been on the top of our sector rotation for a while now, but you can see it's actually taking a hit after hours. So now this is actually a big part of trading as well. This is what we talk about, and I know John and a few other people have been in the boot camp with me. I always do my game planning at night. I do it at 7 o'clock at night and then reevaluate the next morning for this exact reason. Chevron was in my list last night, and it should be. The XLE and all the energy stocks have been the strongest sector for a while. Now you come into today and you say, okay, is the idea from last night's game plan still valid? So I give this to everybody in our community every night. I do my game plan, and then I do a separate video at night where I review exactly what's in the game plan, the longs, the shorts, everything like that. And I'll actually give you a quick snapshot of that today if you want to take a look at it. And then the next morning, like right now, we reevaluate that in our game plan meeting, which happens every morning at 8:30. You know what? I'm going to give you this. You can take a snapshot of this right now. So be ready to do that. I'll put it up on the screen for 3 seconds. So let's see, right here. All right. So that's today's game plan. And remember, check your earnings before the day starts. These are the ideas that I'm looking at today. So CVX was in my game plan. It's opening lower today, so I'm probably not going to take a look at that one today. Merck actually traded into a giant bullish engulfing candlestick yesterday. If you remember a couple of days ago, we were mentioning that when the market got hammered, Merck was actually holding the bid. So you can see it actually went sideways. And yesterday it traded into a bullish engulfing candlestick. So Merck for me right now on a swing trade is also a two-step trade, where I'm looking to buy it and then looking for it to get above the 85 level before I put on new shares. Okay. What else do I have? Lockheed Martin, which has actually been pretty strong recently as well. And oh God, CVS, actually. CVS is another one that I've been looking to buy, and you can see actually a pretty nice breakout here. Now, we're going to actually talk about something that's pretty advanced, but it's a short selling, which is betting on stocks going down. It's not for everybody. A lot of people trade inverse ETFs because they go up when the market goes down, which is 100% okay if that's what you're comfortable with. But I'm going to talk about a couple of ideas on the short side right now, which is Chewy as actually number one on the short side. So we'll take a look at that. CHWY, and you can see why. It's got a push down and a pause, a push down and a pause, a push down, a pause, push down and pause, push down, and now it's paused again. Now we got 3 melted candles here. If this thing breaks back above 42, I'm not going to hang on. If it breaks down, I'm looking for the next $8 or $10 move to the downside. I do want to talk about one other idea that's actually been pretty strong recently, which is American Express. Again, earnings came out. The stock rallied to the upside, broke this longer-term downtrend, and now closed near the lows yesterday. You can see it's actually down again today. So we're looking to see, can the stock remain at this 169 level, which right here, right here, right here, right here, and this morning is a significant reference point as well. So strong earnings, very similar to IBM, pulled back. We're looking to see, can it get back above 169? Now, a little bit choppier, but again, different idea because it's an earnings catalyst. Same thing with Citigroup, same thing with Morgan Stanley, same thing with Wells Fargo. Those financial stocks have also made their way into my game plan this week. And actually now with the FOMC saying March is when we're going to start raising, for me personally, the financial stocks, including Visa today, I guess you would call that a financial stock, those have started to work their way up the top of my game plan now every day, and even looking for longer term swing trades. Now, Morgan Stanley's kind of in the middle of a choppy mess, but it's only about $4 away from all-time highs. So that's also why it's in my list today as well. So we covered a lot of ideas today. Let me see. Alcoa is another one that had earnings and pulled back. So that's going to be another one that's going to be in my list as well. So you can see, again, earnings came out. Stock exploded, broke out here, pulled back with the rest of the market. Pretty much the exact trade with the market. Down a little bit again this morning. So I'm looking to see if it can get back over that $62 level. That's where I'm going to be looking at it today as well. All right. Covered a lot of stuff today. Probably what I would suggest if I was watching this right now, I'd go back later or maybe this weekend and rewatch that stuff that we just talked about before about position size and how that should affect how you allocate your money. Because if you really think about what I said about getting chopped up and beat up because you don't recognize the market conditions, and then the market gets really obvious and you start making money, you're getting back to zero. Instead of maybe small losses or small profits, the market gets obvious and now you're profitable. That's why you feel like you know everything about trading, but you don't get paid. It's because you're not recognizing the conditions and then taking the appropriate action. I could admit it, you could admit it, that when it's obvious, it's not hard. Just ask everybody during the pandemic and how the market was going up every day. Everybody was a genius, right? Now we're going to earn our stripes. Now you need to pay attention to, because every day is not perfect. Perfect days, you go out there and you get paid. Choppy back and forth type of days, well, that's when we have more coffee and preserve that capital because it's the right trade, or we book quicker profits. Go back and watch that part of the video. It's pretty important, because if you are smart and struggling, that's the one last piece that you need to understand. All right. Thank you so much for joining me here every day. I really appreciate it. Have an awesome weekend. Have a great finish to the week, and watch that part of the video again. It was pretty important. All right. Thank you so much, everybody. I really appreciate it.